Have you ever sold in a panic because every headline screamed recession? Or have you jumped into a stock because everyone online said it was going to the moon? Trust me, I've been there and it's cost me a lot of money. But what if I told you there's one tool that shows you exactly when the market is being irrational, whether it's gripped by fear or blinded by greed? Today I'm going to break down the Fear and Greed Index, show you how it lines up with the S&P 500, and give real examples of when ignoring media was the smartest move you could make. So let's get into it. Welcome to the channel, friends. In today's video I'm going to be talking about the Fear and Greed Index and how you could use it to become a better investor and make more money. And this is something that I wish I used more often in the past. So I'm going to be covering the following things. So without any delay, let's get started. What exactly is the Fear and Greed Index? So the Fear and Greed Index is made by a company called CNN, and it tells you what the sentiment is like in the markets. There's 5 different sections to it. So you got extreme fear, fear, neutral, greed, and extreme greed. And the idea is generally when markets are at extreme greed, it means that things are very expensive in the market. And when things are in extreme fear, then usually it's a good thing if you're looking to buy into the markets. This scale is a number between 0 to 100 and it's made up of 7 different things. And the 7 things that make up the Fear and Greed Index is, first of all, the market momentum. And this is essentially the S&P 500 with the 125-day moving average overlaid onto it. And depending on how far away the price is from this moving average, it gives it a score. So for example, right now the markets are really overextended above the moving average, and so it's put in the greed category. When markets were in this region over here, when Trump announced the tariffs, it dropped a large amount from the moving average, and at that time it was extreme fear. The next metric that's seen on the Fear and Greed Index is the stock price strength. This essentially looks at all of the stocks in the New York Stock Exchange and sees which ones are at 52-week highs. For example, right now, just under 2% of stocks in the New York Stock Exchange were at 52 weeks highs. And if you look back in April time, none of the stocks in the New York Stock Exchange were at the all-time highs. The next thing that it looks at is the market price breadth. This essentially looks at something called the volume of stocks, meaning the amount of shares traded in the New York Stock Exchange. And this is essentially comparing the number of shares that are increasing versus the number of shares that are decreasing. And the higher this number is, the more greedy the markets are, and the lower this number is, the more fearful the markets are. So essentially a lower number is weaker market breadth, whereas a higher number is a strong market breadth. The next thing is the put and call options. And in very, very simple terms, a put is essentially betting on the price of the markets to go down, and a call is essentially betting on the price of a stock to go up. So what this looks at is the 5-day average put to call ratio. So remember, put is bearish, call is bullish. So essentially this just looks at all of the puts out there and the calls out there, and it gives it a ratio. So the put divided by the call. And essentially if you were to do some calculations, you'd come to the realization that a smaller number means that the markets are generally bullish, and a bigger number means the markets are generally bearish. So you could see in April, this got almost, the put to call options got to 1, which is as bearish as things can get. Whereas right now we're at about 0.6, which is the lowest thing over here on this chart. So this goes to show that at the moment the markets are at extreme greed. The next thing that's taken into account is the market volatility, and that's calculated by looking at a chart called the VIX, which actually measures the market volatility and seeing how far away the value is from the 50-day moving average. So you've got in orange the 50-day moving average and how far the current price is. So it's neutral at the moment. But in April, when the tariff drama happened, the VIX spiked to over 50, which was very overextended from the moving average, and that's when it was extreme fear. And the final 2 things that are looked at when it comes to the Fear and Greed Index is the safe haven demand and the junk bond demand. And in very simple terms, the safe haven demand is the difference in the 20-day stock and bond returns. And generally speaking, the higher the value is, it means that stocks are outperforming bonds, and the lower the number is, that means the bonds are outperforming the stocks. And the reason bonds are used in this is because bonds, they're usually seen as something that's very, very safe. And the final thing that's looked at is the junk bond demand. The junk bond demand is essentially a higher interest bond. Think of it as a riskier version versus investment grade bonds. So this essentially looks at the yield spread comparing the junk bonds versus the investment grade bonds, the more safer ones. And a smaller number essentially means that investors are taking on more risk versus a higher number where people are playing it more safe. So all of these 7 metrics put together give a value from 0 to 100, and that's your Fear and Greed Index. Now that we know what the Fear and Greed Index is, let's actually overlay the chart of the S&P 500 and explain it further. So in red over here, you've got the price of the S&P 500, and this only goes back to about 2021. There's no data before this. And in blue, you've got the Fear and Greed Index actually as a graph rather than a number. And if you remember that over the value of 75, we're in extreme greed, and under the value of 25, we're in extreme fear. And when we have a look at it, you could see that generally speaking, it's a very good indicator. And these prices, they correspond to another local high over here, after which the markets did go down a bit. And over here, the markets continued going up. And we've got the current time at the moment as well. So you could see that when it comes to market highs, it's a good indication that markets are heated, but it doesn't necessarily mean that we're at all-time highs or the markets are going to have a significant downturn, because over here it's happened 2 times where markets have gone down straight after hitting extreme greed, but there's also times where it continued going up, and actually over here as well, it did have some further upside over here as well. So it's not a very good indication when it comes to predicting market tops. And then when it comes to extreme fear, you could see that it's been to extreme fear a few times. You got one over here, which corresponds to this over here, but the price continued going up. You've got extreme fear here, continued going up thereafter. You've got a few smaller times over here, but you've got a big trough over here, after which the markets did go down a bit more, but then it did recover. You've got another fearful episode over here, after which the markets did go up. You've got again over here where the markets did go up. You've got over here, after which the markets did go up, and you've got over here and over here, after which markets had a small relief, but then after this one, the markets have been continuing going up right now, and now it's in extreme greed. So you could see that when it comes to both extreme fear and extreme greed, it's very good to give you an idea of how the markets are generally, but it's not perfect. There's not going to be anything perfect. However, if you use this with other indicators such as looking at fundamental analysis, looking at how some of the valuations are in your favorite stocks, then I think it's a very good indicator to be using, and I wish I started using this more. I've always known about this, but I just wish that I used it more rather than making decisions out of emotion. What exactly fuels the fear and greed? And the answer to this for me is the media. I feel as though one of the biggest mistakes that investors make when it comes to investing is they trust the media too much. And hopefully in life, as time goes on, you realize that sometimes what the media say, they're very wrong about certain topics. And it's the same when it comes to finances and investing. The media get things wrong. Whether this is done on purpose by analysts or whether it's not, that's all for debate. But as investors, we need to have a plan for what we do. And I'm going to show you examples of what I'm talking about. In about March 2021, the CNBC posted an article with the title, "Tesla is in a bubble and is going down, top fund manager says." By looking at this, it's a very bearish article. There's a few more around the same time frame. So we got February 2021, 4 reasons Tesla stock is tumbling. We've got another one over here where Tesla stock is down more than 20% from its high. How low can shares go? These are all very bearish headlines, and if you were listening to the news at these times, then you'd feel as though Tesla is a stock that you want to stay well away from and not invest in Tesla at all. But if I go on the charts for Tesla, if I zoom in into 2021, about March 2021, the prices were about here. We're talking the price of Tesla in that same year going from a low over here to a peak over there within the same year, which is a gain of 126%. So if you had ignored the media and if you had done the opposite of what they said and actually buy Tesla, then you would have doubled your money. But the mistake investors make, and the mistakes that I used to make, is that I used to actually follow the news, and if they were very bearish on something, then I'd stay away from it. And most people, they just stay away from it. I'm sure if you were to read some of the headlines at the time, you'd probably stay away from Tesla. But sometimes doing the opposite of what the media says is actually a brave move. I want to give you a few more examples of this actually. And the next example I'm going to give is Meta. So in 2022, there was a lot of bearish headlines on Meta. Losses were near 75% from its all-time high. It went down a further 25%. And you could imagine that there was a lot of negativity around Meta at the time. And if you were following the news at the time, then you probably wouldn't have invested into Meta. But if you did the same thing with Meta, November 2022, which is when the news articles were, you pretty much would have bought the actual bottom of the chart when it comes to Meta. And since then, in November, Meta has been up over 600%. That is life-changing money. And there are plenty of examples of when the media have got it wrong. Another famous example is Netflix, where the news were very, very bearish on Netflix around at the bottom. And since then, Netflix is another one that's gone from about $180 to about $1,200. And just to be fair, I'm going to show you some examples of the opposite as well. So when the news have been bullish on something, but the stocks have actually crashed. One of the examples I'm going to use is Peloton. This is one of the most widely traded stocks in the COVID era when everyone was at home, and this company was selling equipment that you could exercise from at home. And the price at the time had soared 350% in 2020, and there was news articles saying that, these are the reasons why it will continue rising this year. And we're talking in October 2021, where there was a lot of news articles on it. But if we were to look at its chart, in October 2020, the price was about here. And since then, the price of Peloton is down 95%. So if you had followed the news at the time, you would have lost a lot of money. This is 5 years on, but even if you held it for 1 year, you still would have been down about 85% if you held it for 1 year. And the final example I want to give is Beyond Meat. This is a company that was making vegan and vegetarian alternatives to meat, and they were gaining a lot of traction in 2020. So this is in August 2020, where there's news articles saying that Beyond Meat is going higher in the long term. But again, if we switch to the charts with this, if we were to go to August 2020, the price is roughly about here, about $129. And if you had bought around then, you'd be down about 97% on it. Right now it's trading at $3. There's plenty of examples out there that you can find. And that's why as an investor, it's very important to be careful with what you do when it comes to these things. So why do people lose in this market? The reason people lose when it comes to individual stocks is because they have herd mentality. They follow what everyone else is doing. If the media says not to buy something, then they don't buy it. If their friends are buying certain stocks, then they're also buying it. The second reason is because of FOMO. They want to jump in when the markets have already pumped. They're buying stocks when we're at greed or extreme greed. And they're scared when it comes to extreme fear. They get priced out of the markets. And the final reason is because of media manipulation, being manipulated by the articles out there. So to conclude this video, I went through the Fear and Greed Index, and I used the Fear and Greed Index to see how the broader market is doing. And generally speaking, when the Fear and Greed Index is at extreme fear, I know that if a stock is down, the likelihood is it's because of the broader markets being down rather than an individual stock being down. So I know that the reason it's not going to be fundamental to a stock is more likely because all of the stocks are going down in general. And these are the opportunities where you should know which stocks are your favorite stocks, which ones you actually want to invest in but you've not invested in because you were scared. And these are generally the times when it's extreme fear to actually be buying the stocks. And when it comes to extreme greed, it's a time to actually start considering taking something off the table. When it comes to these things, it's all about probabilities and not certainties. The Fear and Greed Index is not certain, but the probabilities have shown that extreme fear has been a good time to be buying stocks. And the key takeaway is to always be doing the opposite of what other people are doing. If you like this video, please like and subscribe. Comment below, have you ever actually used the Fear and Greed Index before? How often do you actually use it? Or when buying your favorite stocks, do you look at this? Also share your experiences of going against the herd. And if you want to see my portfolio, then click on this video over here. Thank you for watching.